Welcome to the question clip on Chapter 9, and we're going to be dealing with the question regarding New Horizons advertising. You can follow in your workbook, question book, and suggested solutions. Keep them handy. For any type of question, we start by reading the required part. So if we have a look at the required part for this question, in the A part, they ask us to prepare the correct trial balance of New Horizons advertising as at 28 February 20.9, and of course show all your calculations, and they just tell us where to indicate that in brackets. And then the B part of the required, there they deal with 3 theory questions, and for that you can have a look in your workbook and just see what the answers to these theory questions are. We're not going to deal with them today. If we read the A part, we'll see that we have to prepare a trial balance, and for that purpose we need a framework. So the framework for a trial balance, if we start with the heading, it's the trial balance as at a specific date, like they informed you in the required part. Now, if you had a heading here, trial balance for the period ending, that would not be correct. That is only for financial performance, the statement of profit or loss. In this case, it's balances at a specific point in time. That's why we have the heading as at. Then we have a column for debits and a column for credits, and we are going to use our general ledger accounts to compile this list of general ledger accounts to see whether we've adhered to the duality concept. In the question, after preparing the framework, Karabo Morocco inherited an entity, New Horizons Advertising, from her father, and then this inexperienced bookkeeper has prepared the following list of balances and totals as it appeared in the general ledger of New Horizons Advertising on 28 February 20.9. So they provide us with a list with the totals or balances, and then they give me errors and omissions. So I'm going to start by listing all of these account names with the amounts, and we sometimes start with the amounts in brackets while we are busy preparing our framework, so that we do not waste time later on when we get to the errors and the omissions. Another aspect to just take into consideration, here they give us a list of accounts. Now the order of accounts will not matter, but in real life they will start with the statement of financial position section and the nominal accounts section. So we're going to try and group them together like that. And then they start with the equity items at the top as well, because a business cannot exist without an owner. So we start with the owner's accounts first, then the assets, liabilities. So we're going to try and list these accounts in an order that they will appear in real life entities as well. So if we can have a look at these accounts and start with our statement of financial position section, we're going to have an entry for the capital account, and we start with the amount given for capital of 31,485. We start with that in brackets, because remember, with the omissions or the mistakes made, any of these amounts can change. Then the only indication that we have to make is whether this is a debit or a credit finally in our trial balance. So while you are busy with lists of accounts and while you are still thinking straight, let's indicate in the margin here whether this account finally will appear in the credit or the debit column. That will simplify your calculations as well in the brackets, so that we don't think in terms of mathematics, but we keep on thinking in terms of accounting. The next equity item, if we run through our list, is the drawings account. So we're going to include drawings and start in the brackets with the amount provided for drawings. And drawings will decrease my equity, so that will be on the debit side. Then if we can go over to our list and now have a look at all our assets. We see office equipment is the first asset that we have there. So we're going to include office equipment and start in the bracket with the office equipment balance that was provided so that we can adjust it if we need. Assets will be entered on the debit side. The next asset that I see on the list is my debtors control. And the amount that was provided for debtors control, 7,450, which might change, and debtors will be on the debit side because it's classified as an asset. If I then have a look at, in this question, they mention that we have bank as a favorable balance. So bank favorable balance will also be classified as an asset, so I can include it here. And just remember, in other questions, they might not tell you straight away whether bank had a favorable or unfavorable balance, and then you might just have to leave this indication in the margin until you read about the bank as favorable or unfavorable. And in this case, we can include it because they already provided us with that information. Okay, now I'm done with all the assets and the equity items. The last item from my list that will be statement of financial position section is the loan from Jack Mabasu. So I can include the loan. Remember, you can have more than one loan. That's why we always add a distinguishing description there. And the loan, we started off with a balance of 17,000 Rand, which can change. And this is a liability which will be on the credit side. Back to our question. The remainder of this section is nominal accounts, statement of profit or loss, and other comprehensive income. So I will just now list all of these accounts, and remember to indicate in the margin, debit or credit, will it increase or decrease profits, and we start with all of these amounts in the brackets. It's always nice to start with income first. So let's put our fees earned in a bracket provided as 51,650, and that will increase our profits. So that will be on the credit side, and you can prepare your list. $3,940, and water and electricity will be an expense, so that will be entered on the debit side to decrease my profits. Salaries and wages provided as 9,680, also on the debit side. Then we have our stationery, and they provided us with 4,100 Rand for stationery. The next item is our commission paid. $4,210. That will also be classified as an expense. And those are the amounts that were provided in our question. We just listed all of these items. Now if we can have a look at the following errors and omissions that were found. In number 1, the favorable bank balance was erroneously posted from the general ledger. The correct amount is 32,465. It's still favorable. So they just tell me, and this can really happen, that this 23,465 should be changed to a 32,465. Human error, so we just go and correct it in my bracket where I started with the 23. I'm now going to correct that to 32,465. In number 2, the fees earned column in the debtors journal was undercast by 4,350. Now with this type of mistake, it's always important to look at the column and the journal. Remember, the journal will indicate whether you increased or decreased the account that is indicated by the column. So we're going to use a T account to just quickly see what the effect would have been. The fees earned column, so that's the account that we have to open. Fees earned column in the debtors journal. Now in the debtors journal, that means that you provided them with services on credit. So the debtor would have been entered on the debit side, and then the fees earned account would have had an entry on the credit side. Now that credit entry was undercast by 4,350. So undercast means that this amount that they entered in there, I have to increase that with 4,350. Fees earned will normally have entries on the credit side. So if I put an additional 4,350 on the credit side, that amount will have to be added to the fees earned. I have to increase the amount that they were supposed to receive from debtors. So in my framework, I started off with fees earned of 51, and now I have to add an additional credit of 4,350. You indicated that it has got a normal total on the credit side. That's why if we credit, we add to the 51,650. In number 3, the owner paid 3,000 from her personal bank account on behalf of the entity towards the loan from Jack Mabasu. Now, whenever the owner takes part, we either influence the capital or the drawings account. In this case, the owner paid on behalf of the entity. That means that she added to the entity. So this will influence the capital account. Now, this transaction was omitted from the books. So they have not yet influenced the capital account, and they have not yet decreased the loan, the outstanding amount, to Jack Mabasu. So if the owner paid, the capital will have to increase. So we're going to go to the capital account and increase her stake in the business with the 3,000 rand. Then we also have to go to the loan, and if she paid on our behalf, that means that we will owe Jack less. So we're going to deduct 3,000 rand. In the brackets, can you see that your calculations will follow naturally if you started off with the amounts in brackets? In number 4, the debtors control column in the cash receipts journal was overcast by 2,400. Again, we need the column and we need the journal so that we can identify the T account and the side that it was influenced. Now in this case, they mention the debtors control column. So we're going to open a T account for debtors control. In the cash receipts journal, cash receipts, you receive money from debtors, so that implies that they owed you less. So they put an amount in on the credit side of debtors control, but this amount was overcast with 2,400. That means that it is too high. Overcast, I will have to deduct 2,400 from this amount. Deducting happens on the opposite side. So I will have to debit the debtors control, and the debit in debtors control is an increase. If you think about this logically, cash receipts, I deducted too much from the debtors control account, so they actually owe me that money again. So that's why I increased debtors control. Please don't think about the overcasting part, because that might be confusing. You would want to deduct. Think in terms of the T account. Because that was overcast, I have to go and deduct it on the opposite side. So I'm going to debit debtors with 2,400, and that means I'm going to have to add to the debtors control in my list of accounts. I'm going to add the 2,400 to the already debit balance of debtors control. Transaction number 5, water and electricity paid by check was incorrectly posted to the credit side of the water and electricity account, 370 rand. Now you indicated that water and electricity will be entered on the debit side because it's an expense that will decrease my profits. So if I have a look at the T account for water and electricity, water and electricity will have entries on the debit side because it's an expense. And now they tell me they included the account on the credit side. That's already included in the total that was provided. Now we need to fix this mistake. How do we get rid of this credit entry? We debit the water and electricity account, but that will only cancel the mistake that was made. Then I will have to put another 370 Rand in on the debit side to ensure that we account for the payment that we made. This means that we're going to have to debit water and electricity twice with 370 Rand. Debit in water and electricity, we already have a debit, so we're going to have to add the 370 to the debit side of water and electricity account 2 times. So if we go to our framework, water and electricity, we already have a debit, so now we need to add another 370 for the cancellation, as well as for the correct entry. Omission or mistake number 6, the telephone expense for the year were posted to the stationery account, 595. We have to fix the stationery account and we have to include this telephone expense for which we did not have an account. That's why we have space at the bottom so that we can add it. So we're going to add the telephone account. That's an expense, so that will be on the debit side. And we need to go and take it out of stationery because they erroneously debited the stationery account with the 595. Our last transaction, number 7. Tau Mugali omitted the rent expense account from the list of balances. Remember, we used the general ledger to compile a list of balances. This was just omitted, and the rent expense for the period amounts to 24,000. So I'm going to again add at the bottom my rent expense. Which will decrease profits on the debit side. And they provide us with the amount of 24,000. We are done with all the mistakes and omissions, and they asked us to prepare a correct trial balance. So what we can now do, we close all our brackets, do the calculation, 31,485 plus the 3,000, and then you just go and put it in the column that you indicated in the margin. So this is a question of finalizing your answer so that you can adhere to the required part. For drawings, we had no adjustments, so we can include that on the debit side. Office equipment, debit side, no adjustments. For debtors control, we had an adjustment, so we close the brackets. We add the two amounts together as indicated in the bracket. Our bank we changed. And you just follow your instructions in the margin. The loan was also adjusted. And we will carry on with all of these adjustments. Stationery adjustment. Commission paid. The telephone account. And lastly, the rent expense. Now, the whole purpose of a trial balance, test your duty concept. So we add the debits in the debit column, and we add the credits in the credit column. And if everything went according to plan, my debits will be equal to my credits. If these two balances are in agreement, then you are very happy about your duty concept. If it's not the case in a test or in the exam, please don't go and look for the difference between these and try and change concepts that you've applied at the top here, especially your debits and credits. Stick to what you wrote here. You will get your marks for the adjustments that you made in brackets over here. I hope that this will assist with your preparation of trial balances. Good luck with the other questions.